Ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a Forex Quick Look. I'm going to take a look at the Aussie versus US dollar. Today's date is August 26, 2024. Let's get started. You may ask, why even bother? This bar right here, this is a 4-hour chart. The bar right here is only 7 pips wide. Yes, the range so far in trading today is only 7 pips for the Aussie versus US dollar. If you take a look at the high for the week, which was up here in the low for the week, we don't have much as well so far. But that's good news for traders. Why? Because it says, the market's non-trending, and non-trending markets ultimately move away from non-trending markets. In other words, they either go higher or lower. And so now it's up to you to find those levels that are going to push the market in one direction or the other. And that's what technical traders do. They look for those technical levels that give them clues for which way the next move is going to be. So when you take a look at the 4-hour chart of the Aussie versus US dollar, there are a couple levels that really stick out in my mind. One is the price moved sharply higher at the end of last week with the dollar selling. Where did the price go? We went right up to this price right here, which happened to be this high price right here. This goes back to July, the high price for the trading year. I think it was a high price for the year anyway. It was a high price at least going back to July. And the sellers leaned against that level. Why? Because risk can be defined and limited against that level. If the price were to go above that level, then you'd expect further momentum in the direction of the break, but it didn't. Instead, the sellers leaned against the level and pushed the price back to the downside. Now, the next level of interest to me off of this chart is this level right here, this red line right here. This red line had a high price right here. Then we came back up to that high price near that level right here, maybe a pip or two above that level. Traded above and below the level through here, and then tried to hold support against the level here and here before failing and breaking to the downside right through here. And that from this point right here is Katie bar the door to the downside. We went a number of big figures to the downside, 400 plus pips to the downside to be exact, in a relatively short period amount of time. Once we hit this bottom right here, we started to rotate back to the upside, moving all the way, retracing the whole move to the downside, including getting to this level right here at 0.67604, finding willing sellers against that level before basing and moving and breaking quickly to the upside through here. So guess what? We have a battle going on. We have a battle in this non-trending range between this level up here at 0.67978, let's call it 0.68, and this level right here at 0.67604. Only about 40 pips separates that low from the high, which is good. That's what you want to see. You want to see the spring getting tighter and tighter, and ultimately the spring breaking and the price either moving more to the downside right here, in which case we'll look toward this swing area down through here, or move to the upside, breaking to new highs, and seeing what's up above there in a momentum move to the upside. So, the lines are set, the bookends are there, the break points are there. All you have to do is wait for the break and hope for the momentum. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.